on the advanced taxation. My calling name is Sam, so I put this as here. I'm going to begin and going to cover some of the areas. This session is primarily focused at the advanced tax student who is going to appear exam in March, which is actually very, very near. I think about only 10 days to go. 5th March, right? I expect all of you to unmute and also switch on the video when needed, when asked. This session is going to be fairly interactive. So there will be discussions. Obviously, this is going to last about 60 to 90 minutes. Therefore, it's not something that we're going to be able to cover in a huge amount. But I'll try and pick something I feel is important for the purpose of this exam. I have noted we are about good few number, but I was expecting more. Never mind. This is where we are. I assume you can view it, right? Please give me thumbs up. Can you see it? Yeah? Yeah, can you see it? Right. And if you don't understand something, please stop me, raise your hand and ask me. Let me tell you what I have thought when I was putting together this session for you. When I was thinking about this session, I assume that you have already completed your core study and you are coming to the middle or end of the revision session because it's only 10 days to go. I'm not expecting you have already done your mock, but some of you may well. For this purpose, I have primarily thought about covering personal taxation, primarily the international taxation part of the UK personal tax, what I call normally the cross-border implications. What I meant by that is when someone has income in more than one country, for example, UK and another country, what may be the tax implications in the UK? The personal income tax, capital gains tax, and inheritance tax. So we'll be looking at from the perspective of someone being resident in the UK and having income or gain or assets in another country, as well as not resident and still having income, assets, and gain in another country, as well as the UK. I've also thought about the residence and domicile. Otherwise, the personal taxation session won't complete. Therefore, the main bit of this personal taxation is residence and domicile. I also thought about the source versus residence taxation for the purpose of this session. Assets, where the assets may be situated, that's called situs. Income, where the income is arising. Coming to the UK for the first time and leaving the UK. This will have the implications on all of the taxes, income tax, capital gains tax, and inheritance tax. Also, this will have split year treatment implications. Is it here? And remittance basis. What may be the conditions for remittance basis? In which circumstances the remittance basis can be used, where income is arising from more than one country, one being UK and another being obviously outside the UK. So for the UK, here we call it residence, and for outside the UK, we call it non-residence or foreign or abroad. And foreign income position, foreign gain position, foreign tax relief, how you will get the tax relief for any income that's paid outside the UK for foreign income, gains, and the assets. Also, how the double tax treaty is going to assist to claim the foreign tax credit. And there may be ethical and professional marks discussion depending on how the time goes. I will try and touch base on this area as well, especially the professional marks, which started from June 2023. This is getting more important now than ever before. It used to be a very small number, but now the number has gone up 20 marks. Therefore, the ethical and the professional marks alone will have a 25 marks. 5 marks ethical, and 20 marks professional skills. Therefore, this area is now being a lot more important and valuable than before. So do keep that in mind. And obviously, if you could laugh a bit, that will equally be great. So I will begin with the cross-border implication, what I call is international taxation of the individual in UK. Let's move on. What I may be thinking is this. I have a little table for you for the discussion. So you all need to be involving in discussion. Can you please unmute and also switch your video on? Everyone, please. My first question for you is, if someone is UK domicile and UK resident, look at the concept here. UK domicile, UK resident. I won't be discussing further what may be the UK resident and what may be UK domicile. I assume you already have this knowledge from your study up to this point. Therefore, I'm taking you further from this on. And I have on the left side, you can see different income gains and the assets, one being UK and another being what we call it overseas or foreign income. And on the right side, you can see UK resident, UK domicile, UK resident, non-UK domicile, non-UK resident, UK domicile, non-UK resident, and non-UK domicile. Therefore, the whole of the personal taxation, residence and domicile concept for the purpose of income tax, capital gains tax, and inheritance tax is going to be summarized in this table in the next 15-20 minutes or so. Now, Suman, can I ask you the first question? If someone is UK resident and UK domicile, his UK income is going to be liable to UK income tax or not, please? Suman? Can you please unmute yourself and try and answer? Anyone? Anyone wants to try? Nissan? Do you want to try, Nissan? Okay. Bishwaraj, please give yourself a go. Right. Arjun? Okay, no worries. The first thing is, if someone is UK resident, forget the domicile for now, his or her all income is liable to UK income tax. So I'll begin with this one again. UK income is liable to UK resident, UK non-resident as well. So any UK income is liable to UK income tax regardless the residency status of an individual. What I meant by that is whether someone is UK resident or not, if there is a UK income, for example, UK rental income, it is liable to UK income tax, whether UK resident or non-UK resident. For the purpose of income tax, UK domicile or non-UK domicile is not greatly relevant. We'll come onto that in a minute shortly again, but for now, any UK income tax is liable to, any UK income is liable to UK income tax regardless of the residency or domicile status of an individual. Therefore, in all circumstances, for the all four boxes, UK resident, UK dom, UK resident, non-UK dom, non-UK resident, UK dom, and non-UK resident, non-UK dom. In all circumstances, the first line is yes. UK income tax liable, UK income liable to UK income tax in all circumstances. Move on to the next, overseas income. If someone is UK resident, overseas income is liable to UK income tax, regardless of domiciliary status, whether someone is UK domicile or not. If someone is UK resident, overseas income is liable to UK income tax. But if someone is UK resident and non-UK domicile, remember, non-UK domicile but UK resident, then overseas income can be claimed the remittance basis. When I say remittance basis, means those income may be liable to UK tax only if remitted to the UK. That means you can choose to claim the remittance basis and only report the overseas income that has been remitted to the UK. Again, the remittance basis, it has its own conditions and pros and cons. But the overseas income, if it is less than £2,000 only, then remittance basis is automatic. When I say automatic, that means you do not have to pay remittance basis charge, the first thing. The second thing, more importantly, you do not lose the income tax personal allowances and the capital gains tax annual exemption if someone is non-UK domicile. And the remittance basis charge will only be applicable if someone is residing in the UK for at least the previous 7 tax years, which I'm sure you have already studied and understood that point. Now, moving further, if someone is non-UK resident but UK domicile, overseas income is not liable to UK income tax, simply because the income tax principle lies on residency, not on domicile in the UK. Again, the income tax principle lies on the residency, not on domicile. What that meant is this. What that meant is, if someone is non-UK domicile or UK domicile, but if he or she has not been residing in the UK, then obviously the overseas income will not be liable to UK income tax. Otherwise, think about it. For example, my dad is living in Nepal and he has income in India, for example. And that income in India is not going to be liable to UK income tax because it is neither here nor there. My dad hasn't been residing in UK, and the income, the rental income from India, is not UK source income. Therefore, such income who is not residing in the UK and the income is not within the UK is not liable to UK income tax. That is fair enough. Moving on to gains. Again, UK gains. If someone is UK resident, forget the UK domicile for now. If someone is UK resident, then UK income is going to be liable to UK capital gains tax, CGT. If someone is UK resident, but non-UK domicile, remember, non-UK domicile, the UK gain is liable to UK capital gains tax. If someone is non-UK resident, now look at here. If someone is non-UK resident, then most of the UK gains are not liable to UK CGT. Remember, when I say non-UK resident means I'm not talking about the temporary non-residents. I'm sure you understand the principle of this temporary residence for the purpose of capital gains tax. In very brief, if someone has been residing outside the UK for less than 5 years after leaving the UK, then that's called temporary non-resident. If temporary non-resident, then that temporary non-resident will be treated as equivalent to UK resident for the purpose of UK capital gains tax. And therefore, any UK gain, when I say UK gain, means any gain on sale of the UK property, UK's assets, is going to be liable to UK CGT. So if someone is UK resident, liable to UK CGT. If someone is temporary non-resident, then still liable to UK CGT. If someone is non-resident in the UK altogether, then not liable to UK CGT on UK gain. But there is one exception. Having said that, there is a recent change. When I say recent, it's already a few years now. Any UK situated land and building and business assets used in business, for example, by permanent establishment in the UK, then those assets would still be liable to UK capital gains tax, even someone is non-UK resident. I'm sure this point is clearer here. Any UK land and building and business assets used in the business in the UK, for example, permanent establishment, then those gains would still be liable to UK CGT for non-UK resident. Now, moving on to the overseas gain. Let's look into the first point, UK resident. Again, for the purpose of capital gains tax, domicile is not very relevant concept. So you'll see for the income and the gains, the concept of domicile is less of the relevant or so. I'll come on to that in a minute again. If someone has overseas gain, when I say overseas gain, someone is residing in the UK, living in the UK, but has, for example, shares or property in another country, then any sale of those shares or land and building or any other property will be liable to UK capital gains tax. For UK resident and for UK domicile with resident is liable to UK capital gains tax. Next box, if non-domicile, what happens? Let's look at this. If someone is UK resident but non-UK domicile, the first principle is all gain are going to be liable to UK CGT. That's the first principle. But if someone is non-UK domicile, then you can claim to be taxed on a remittance basis. You can claim to be taxed on a remittance basis. In that case, if you remit any gain to the UK, only those gains are liable to UK CGT. But if any overseas gain as well as overseas income, if they are taxable in another country as well, then any tax that was paid in overseas country will be available for the tax relief, will be available for the foreign tax credit in the UK. Obviously, it has a restriction, but in principle, the credit is available. And the credit runs under multiple principles. The first principle is unilateral relief. That means lower of the UK tax on that income or gain and whatever foreign tax was paid will be available for the tax credit in the UK. That's the first. Second, if there is double tax treaty between UK and that particular country, the double tax treaty will actually guide you whether that gain and that tax is going to be relievable in the UK as well, depending on the circumstances, depending on the assets, and depending on the clauses in the double tax treaty between UK and that another country. Yeah. Moving further, if someone is non-UK resident, then overseas gain obviously will not be liable to UK capital gains tax. If someone has not been residing in the UK and he has properties outside the UK which he sold and made the gain, obviously in that case, that gain is not going to be liable in UK capital gains tax regime. Let's move on to little peculiar tax, inheritance tax. Inheritance tax works differently to income tax and the capital gains tax in the UK. And not very many countries in the world does have this inheritance tax IST regime. Let me just look at if there is anything. Let me just keep this chat box on a side. Yeah. I'm moving on to the next. UK assets will be liable to UK inheritance tax if someone is UK resident and UK domicile. Let me take you this further. The concept of domicile, once again, the concept of domicile is relevant more for the inheritance tax than the income tax and capital gains tax. For the purpose of income tax and capital gains tax, it will only be relevant, the domicile will only be relevant if you are claiming remittance basis. What that meant is, if someone is UK domicile and UK resident, then you cannot claim the remittance basis. In order for you to be claiming remittance basis, obviously you need to be UK resident as well as non-UK domicile, the second column. Now come to the inheritance tax. UK domicile concept is important. Number one, UK assets always liable to UK inheritance tax. Remember this point. Just always liable to UK inheritance tax. But the overseas assets would only be liable to UK inheritance tax if he or she is resident in the UK. So overseas assets will not be liable to UK inheritance tax. Remember, overseas assets, no UK inheritance tax. Only if someone is resident in the UK, then, and domicile. Here is the domicile. Just think it through. Just think it through. If someone is UK domicile, then regardless of the residency, think about it, regardless of the residency, he or she will be liable to UK inheritance tax on the global income. Now let's complete the picture. Let's look at a box here. UK income tax, liable to UK tax, sorry, I'm confusing this. UK income, always liable to UK income tax under no circumstance. Whether someone is resident or not, whether someone is domicile or not, UK income, always liable to UK income tax. Overseas income, if someone is UK resident, then yes. If someone is not UK resident, then no. But if someone is non-UK domicile, as I discussed, remittance basis can be claimed. Moving on to the gains, UK resident, always liable to. Non-UK resident, the answer is briefly no, but if there is UK land and building, for example, then the answer is yes. In the past, it used to be altogether no. It's only a few years this rule came into play. It's only a few years. Yeah. Overseas gain, UK resident, the answer is yes. Non-UK domicile, the answer is yes, but you can claim the remittance basis. Non-UK resident, the overseas gains are not liable to UK tax. And you can see UK assets always liable to UK inheritance tax regardless of someone's residency or domicile status. Finally, overseas assets, UK domicile, yes, non-UK domicile. So from this table, you can see, I'm now going to start from the bottom to the top. If someone is UK domicile, let's look at this again. If someone is UK domicile, the whole of the assets, whether UK or overseas, means the worldwide assets will be liable to UK IST. What is unfair, as you can see, is even if someone is non-UK resident, see, even if someone is non-UK resident but UK domicile, then your worldwide assets is subject to UK inheritance tax. So now to complete this picture, UK income always liable to UK capital gains tax. and UK income tax and UK inheritance. So UK income, always UK income tax. UK gains, always UK capital gains tax. And UK assets, always UK inheritance. The rest will be dependent on the residency or the non-dom or the domicile basis. Right? Any questions so far? Any questions so far? Right. Let me move on. If any questions, please let me know. Otherwise, I will move on. In order to illustrate this, I will take you to some exam type question. This is one of the adapted past exam questions, 𝐷𝐷. And I have taken the part relating to this chapter, personal income tax with cross-border. Let's read this question, please. Your firm has been asked to provide advice to an existing client, 𝐷𝐷, who requires advice on his residency status and remittance basis. I wouldn't say do the past exam question, do the practice MOOC, and do the final MOOC. Everybody is saying that, and you will be doing that anyway. And if you haven't been doing, please do between now and the next 10 days. Let's look at this. 𝐷𝐷 links with the country Canada, not Canada, Canada. So 𝐷𝐷 has some link with Canada. What is the link? Let's look at it. He was born in Canada and domiciled in Canada. It's making it clear to you. He owns a home in Canada. So there are at least 3 connections here with the country Canada. He was born there. He is domiciled there. His domicile there means his parent must also be Canada. And he owns a home in Canada. Let's look at this. His only income in respect of investment property in Canada. So what it is saying is he doesn't have any income anywhere apart from investment properties in the country Canada. And he frequently buys and sells property in Canada. So it looks like he's actually trading in the properties. It looks like his business is to buy and sell the property. Looks like. We do need further information to understand whether he's actually trading in property or not, but for the purpose, this information will suffice. He also has a link with the UK. Now you can see here, cross-border, international. He has some relation with the country Canada, and he also has some relation with UK. What is this? His ex-wife and 12-year-old daughter moved to UK on 1 May 2021. There are 3 things here. Number 1, the date, 1st of May 2021. That means the tax year is 21-22. That's the first point. Second, 12 years old daughter. That means what we call is minor under the age of 18. So the family relation. Ex-wife. Would ex-wife be a family relation? Any answer, please? Abhishek, would ex-wife be family relation for the purpose of tax? Anyone? Nishan? Anyone? If you don't want to switch on and speak, please use the chat box. She won't be. Thank you. Ex-wife. Who cares? If someone is current wife, then obviously you do care. Otherwise, if someone is ex-wife, forget it for now. Yeah? Let's move on. He first visited, look at here. He first visited to the UK in the tax year 21-22, but was not resident in the UK at the time. But here we don't know how many days he spent in 21-22. He did not have a house in the UK until he purchased on 6th of April 2022. So basically, at the start of the tax year 22-23, which is 6th of April 2022, he bought a house in the UK. Now look at the relation here. His ex-wife, which is not the relevant point for the purpose of this, but his underage minor daughter has been residing in the UK from 2021-22. He came to the UK in 21-22, but he did not spend many days by the looks of it because he was not resident in the UK, as the question says. But it will be nicer to know how many days he would have spent in 21-22. The question isn't clearer. Let's carry on. He expects to live in the UK in the house for between 100 and 185, sorry, 150 days. Now, this is another hints for you. So, in 2021-22, he did come to the UK, but he did not spend that many days. How many days? We don't know. But it is clearer he was not resident in 21-22. But in 22-23, you can see he did buy a house, must be a rich guy, and he is planning to spend between 100 and 150 days. So something between 100 and 150 days. So we need to keep this in mind. This is going to be useful. Please have your tax table as well in front of you. For the purpose of some test, you can always refer to your table. There is one little information. Actually, I can guide you. Just give me a sec. Somewhere in the second page, there will be residence status table. And that table will tell you how many days are needed or how many ties are needed if there is no automatic overseas and no automatic UK test satisfied for the purpose of residency. What we call is a statutory residence test. So here, let's move further. That's the requirement. On the assumption, and look at the marks. I have put that in green. There is a total of 10 marks. When you say total of 10 marks, you will have about 18 to 20 minutes. This question isn't that difficult, but the challenge is the time. You need to try and finish within 18 minutes, the max 20 minutes. You know that. So the first point is saying explain. See, you need to explain here. So what you need to explain? Explain how his residency status will be determined for that tax year. That tax year means obviously 22-23. But read further the first line. On the assumption that Barako does not satisfy any of the automatic overseas residence test, nor any of the automatic UK residence test. So that means you do not need to talk about the first two. So it is actually telling you, if you remember, what to explain is the sufficient ties test. The question has already mentioned that he doesn't satisfy the overseas test and the automatic UK test. So you need to straight away go to sufficient ties test and look at the marks. So the 5 marks means obviously you need to have good 5 points plus 1 or 2. So we know the sufficient ties test have 5 ties. And for someone who is coming to the UK for the first time, the 4 of those tests are going to be applicable, which we'll look at it in a minute. So this question is telling, explain the sufficient ties test, not the first 2. Remember how the statutory residence test works. You always begin with the automatic overseas test, AOT. Then if those automatic overseas test doesn't get satisfied, then you move to automatic UK test, AUT. If the AUT is also not clear, not satisfied, then you move on to sufficient ties test. So there is a system. You always begin with automatic overseas test. Automatic overseas test simply means there are 3 primary test. Number 1, less than 16 days. Number 2, less than whatever 45 days. Number 3, overseas full-time work. Obviously, those are the 3 main tests. Then you move on to, if these 3 didn't get satisfied, move on to automatic UK test. Yeah, automatic UK test, you always begin with that magic number 183 days test or not. Correct? And then you move on to another 2. If that didn't get satisfied, you move on to sufficient ties test. Remember, sufficient ties test means you remember those 5 ties, but importantly, you try and implement, you try and apply those tests in the current circumstances. If you look at here, there are enough hints. There are enough hints in the ties test to be satisfied. So on. Second is how, so the first thing is explain why Barako will not be deemed domicile. So the second question is asking you to explain the principle of deemed domicile and apply in the scenario. But don't forget there is only 2 marks. Therefore, you'll be trying to be doing within the less than 4 minutes. So basically, you are only putting 2 or 3 points under this second requirement. You don't want to explain too long because there is only 2 marks. No matter whatever you put there, the maximum you're going to get is 2. Therefore, you need to be time bound and write the main points, leave the rest. You always try and do 1 mark, 1 point. But our points in exam may not always be so accurate. Therefore, you always try and put 1 or 2 more points just in case to be safer. So here, 2 marks, 2 points, maybe add 1 or 2 short points just to satisfy yourself. But remember the time. The third is on the assumption that Barako is a resident. See, is resident but not deemed domicile. Now here, this question is actually asking you 3 things within 10 marks. Number 1, statutory residence test. Within that, don't talk about automatic overseas and automatic UK. Only go for sufficient ties test. That's the number 1. Number 2, briefly talk about deemed domicile and apply to the circumstances. And number 3, if someone is resident but not deemed domicile in the UK, then talk about remittance basis. In the third requirement, if you see, it's just the 3 marks. 3 marks means what? You won't be able to spend more than 6 minutes. The max, I would say 5 minutes. In the 5 minutes, you're going to put 3 to 4, the maximum of 5 points. But for the 5 points, you have 2 requirements. In fact, this third question is something like this. The answer is going to be shorter than the question. You can see the question is 3 lines, but the answer is also going to be 3 or 4 lines. So in the third requirement, it is asking you to state the tax implication of claiming remittance basis and explain whether or not there would be remittance basis charge. So this third point is based on your knowledge of the materials, of the textbook, of the tax stuff that you learned as part of the taught course or self-study. So here you talk about tax implication of claiming remittance basis and also talk about remittance basis charge. So the third is actually easier one. Remittance basis charge would only be applicable if someone has been residing in the UK for a minimum of 7 out of the 9 years, and the charge is going to be 30,000. And if someone has been residing even longer, 12 tax years out of the 14 previous years, then the remittance basis charge would be applicable, which is even higher, double the 30,000, which is 60,000. That's the second bit. And the first bit is claiming the remittance basis. What happens if remittance basis is claimed? The answer is very, very theoretic. Here, you don't even need to bother too much of the information for the third part. So the remittance basis and the tax implication means if someone is obviously not domiciled or deemed domiciled and resident, then the remittance basis can be claimed. That's the first thing, which you don't even need to say because the question is telling you. So what is the tax implication? The third one that I'm beginning with. The tax implication is, if someone is claiming the remittance basis, go back to the same principle that we discussed in the table earlier, then the foreign income will only be taxed in the UK if those income are remitted to the UK. Otherwise, those income will not be liable to UK tax under the remittance basis. And if remitted and those income or gains were also taxed in another country, tax credit can be claimed under unilateral relief or bilateral relief. Bilateral relief means double tax treaty. Yeah, that's the third bit. And if you want, you can always add UK always liable to UK tax regardless of the domiciliary status and whether remittance basis is claimed or not. That's the third part. Let's go back further. See, what I have done is a suggested answer. So for the first point, residency status in 22-23. Remember, this had 5 marks. So you need to be writing 5 points, and you can always add 2 or 3. 5 means what? About 8 to 10 minutes you can spend the max. So you'll be writing about 5 to 8 points. That will be more than enough. You always try to gain at least 60%. I know 50% is the pass mark, but you always try and aim. Always try and aim your pass mark being 60, not 50. And you are always safe. Give me a sec. Guys, Buraco did not meet automatic overseas or automatic UK test per question. So you don't have to talk about it. You don't even need to write this line in exam, to be honest. You can straight away move on. Remember, the answer here is a bit longer. Sorry, give me a minute. Just to exemplify what may be the best answer. And you're not expected to write to this length because the time bound. The second point is, so I would consider sufficient ties test to decide his UK tax residency in 22-23. Even if you do not write the first line, you try and write this line. I would consider sufficient ties test. So you're telling the examiner that I know the statutory residence test. I know automatic overseas, automatic UK test doesn't apply. Therefore, I'm moving on to the third main test, which is sufficient ties test. Guys, can you give me the 3 sufficient ties test point, please? Anyone? Shekhar, do you want to try? What 3 ties may be there? Nitin? Yeah, can you just make your answer visible to everyone? Please. Anyone? 3 different ties. This is coming from the textbook. There are a total of 5 ties. Generally, can you give me 3, please? Thank you, Sumit. Family tie, work tie, accommodation tie. Yeah, remember these 3 at least. I'm going to be discussing 5, but always remember minimum of 3. Family tie, accommodation tie, work tie. Let's look at this. So the first is family tie. In his case, he will have family tie because some minor children is resident in the UK. ex-wife is not relevant. Even the current wife may not be relevant. Sometimes forget the ex-wife, right? So he does have family tie because a minor child under 18 is resident in the UK in 22-23, who moved in the UK in actually previous year. The second tie is accommodation tie. Yes or no? The answer looks like yes, because he has a place to live in the UK. Don't forget, it doesn't always have to be his home. As long as a place is available to live when he is in the UK. When you say place available, you may always say, oh, there's always a hotel room available, but it is not available for you. It is available for everyone. Therefore, accommodation time means try and find a place that is available for you to live in the UK when you come to the UK. In his case, and not the house, sorry, and not the hotel. In this case, he has acquired a house in the UK on 6th of April 2022, which is 22-23. Therefore, he does have accommodation. Therefore, he satisfies this test. And he expects to reside for at least 100 days. So, looking at the question, it is telling you some hint. The question is telling you this gentleman is going to be residing in the UK, living in the UK for at least 100 days in 22-23. 100 days means more than 90 days. Yeah, so there is a 90 days test. Let's look at the next. Work type. Work type, the answer is no, as he doesn't work in the UK. The question hasn't said anything, therefore I have said assume. Remember, in exam, some information are clear, explicit, and some information are implicit. So you always need to, remember, you always need to put this whether information is clear or not. If the information is not clearer, then you need to assume. In this case, it's not clear in the question, so I assume he doesn't work in the UK. And in any case, there is no substantive work. Substantive work means minimum of working 40 days or more in the UK. And the question is silent about it. So I assume that there is no work type. And the fourth is 90-day type. Yeah. Here I've said appears no, because I'm not clearer. This 90-day tie will only apply. Remember, this 90-day tie will only apply if someone has been resident in one of the previous 3 tax years. If someone has been resident in the UK in one of the previous 3 tax years. In this case, 21-22 is the first tax year he visited. And it's not clear how many days he spent. And it's certainly not clear whether he spent 90 days or not. Therefore, the answer is no. That's what I'm saying. The first 3 ties you always remember: family tie, accommodation tie, work tie. In number of cases, one of these 3 may be applicable. And the 90 days tie is applicable if someone was residing in the UK in one of the previous 3 tax years. And the 5th tie is country tie. Country tie means if someone has been residing in multiple countries, in more than one country including UK, then in which country he was spending more time, in which country he was living longer than any other country. Again, this applies to livers only, who is living in the UK in any particular tax year, or the same principle if resided in one of the previous 3 tax years. Obviously, the answer is no. So now let's see. In his case, only 2 ties are applicable: family tie and the accommodation tie. Let me take the time. Let's look at things further. With the UK ties, if you look at this table, the tax table, the second page, he will need to spend between 121 days up to 182 days. If you look at that table, the second last point within the table under the residency status, it says 121 up to 182 days, resident if 1 UK tie or more. What that means is, if someone is previously resident, in his case, is not, Let's move on to the next part of the table. If someone is not previously resident, which is the case for him, then 2 tie will only make him UK resident if he has been residing in the UK for 121 up to 182 days. So the answer is clear. He plans to live in the UK for 100 days, up to 150 days. So if he resides only up to 100 days or within 120 days, then he will not be resident. But if he chooses to live in the UK for more than 120 days, which is thinking up to 150 anyway, then if he goes over 120 days, then he will be resident. So in this question, the answer is if. If residing for less than 120 days, then he won't be. If residing more than 120 days, then he will be resident. That's the first bit. As you can see, there's so many points, but you do not have to put all these for the purpose of 5 marks. You don't bother the introductory line. You may begin saying, I would consider sufficient ties test. Then you at least talk about the family tie, accommodation tie, and the work tie is a bare minimum, because you know he was not resident in the UK in the prior. Therefore, the last 2 ties may not be relevant for him. So first 3 ties would actually give you about 3 marks, so you can actually go ahead with that. Now, what happens? Answer continue. The second bit is deemed domicile. Deemed domicile, we know. What marks? 2 marks. We are going to put only 2, 3, maximum of the 4 points. So deemed domicile is the concept of number of residency, number of years of residency. Sorry. What I meant is, if someone is residing in the UK, living in the UK in long term, for longevity, for example, someone is not UK domicile, but has always been living in the UK for more than 15 years, then the UK HMRC, UK IRD equivalent is telling you that if you are living in the UK all the time, although you are not UK domicile, living here for more than 15 years, then you will be treated as deemed domicile for the purpose of tax only. Remember, for the purpose of tax only, then this concept will come into play. So he was not resident in the UK. Straight away answer, because we don't have time, 2 minutes. Sorry, 2 marks, therefore 3, 4 minutes the max. He was not resident in the UK for at least 15 tax year out of the previous 20. He just came last year. He just came actually this year. Or first thing is resident or not. He is not resident. In the second part, assumed he is UK resident. That's what he's saying. But no way resident for 15 years, just 1 year anyway. So therefore, he will not be deemed domicile. That is the answer. With these 2 points, you will have that 2 marks. He was not resident in the UK for at least 15 years out of the previous 20 years. That means in order to make you deemed domicile, the 15-year rule. And this 15-year rule applies to income tax as well now. It used to be only inheritance tax, remember, until few years back. This 15 years been introduced for the purpose of income tax and the capital gains tax not very long ago. But it was always there for the inheritance tax. And for the inheritance tax, this deemed domicile will need to satisfy a couple of other points as well. Please go back and check in your textbook if you haven't actually been through or if you have forgotten. Yeah. So the answer is also he was not born in the UK, and it appears his parents were not UK domicile. It's just something I have added to make bigger answer. You don't need to put this. The first 2 points will make you 2 marks. But for the case of inheritance tax, for the case of deemed domicile, you always try and put this line whether someone was resident in the UK, sorry, born in UK or not, and whether his parents were born in the UK or not, his parents were domiciled in the UK or not. Put this line as a standard. You always get half or 1 mark sometimes for this point. Someone was born in the UK or not, his or her parents were born in the UK or not, and his or her parents were UK domiciled or not. Yeah, this point will earn you half to 1 mark in some cases. So put this down because it's not the difficult point. And from the question, you can easily pick this. So he has not obtained domicile of choice in the UK. This is something I have added. You don't need to come up to this. And the remittance basis I have already discussed. He is UK resident. The question talks about it. Neither domicile nor deemed domicile. The first 2 points you don't have to add. The third, claiming remittance basis, he will not be liable to UK tax on his overseas income and gains unless he remits them to the UK. This is the main point. This will take you, score you 1 marks. The first 2 points, not really greatly relevant. If you remember, if you have time, you can put it there. Otherwise, this is the main point. Claiming remittance basis, he will not be liable to UK tax on his overseas income unless remitted to. But this is another important point that you add. He will lose the income tax personal allowance and CGT annual exemption in 22-23 if he claims remittance basis. This is the point you need to add. So this third and the fourth point you add in the exam. UK income will always be liable to UK tax regardless of his residency and or domicile status. We have discussed this in the table. This line you can always remember and add. It can again earn you half to 1 mark in exam depending on the question, but it will give you at least some credit. So in this part, what is important is the third line and the fourth line. The fifth one is the requirement obviously there. Remittance basis charge will not apply to him in 2023 because RBC will be applicable only if resided 7 out of 9, and this is not the case. The last point is the requirement. Obviously, this will give you 1. So here in the third part, the last point, you always need to put it there, 1 mark. And if you look at there, the third and the fourth, this point will give you 1 mark. And there is your 3 marks. So you do have that 3 marks. So it's easy. The reason I picked this topic for today's discussion is I wanted to contribute something for you, specifically for the purpose of this exam. And I know the cross-border is always difficult area and can be confusing sometimes. Therefore, my aim today is to try and illustrate this concept for you. I can see you being quiet. Can you please unmute yourself? I needed to ask you something. Everyone, can you please unmute? I have one more question that I need you to be doing it for me. I'm sure you have pen and paper in front of you. I will give you 5 minutes for this question. 𝐷 is the name of another country. Here is the requirement. There's 2 requirements, total of 3 plus 5 marks, which is the total of 8 marks. The second part is almost something similar that we discussed. First, can you have a read of this question, please? I'll give you 5 minutes to jot down something for you. First, please read the question for 1 minute, maybe 2 minutes the max, and 3 or 4 minutes. I wanted you to put down something on a piece of paper. I'm sure you have in front of you. Look at the requirement first. The first requirement is about no, father. The second requirement is about Dan, son. The first requirement is for the inheritance tax, and the second requirement is more for the income tax. The second requirement is talking about something similar that we talked earlier. can you please spend 5 minutes or so? 8:45, I'll give you 5 minutes. 8:45, I'll give you 5 minutes. Yes, up to 8:50. Three more minutes, please. Remember, it is you who is going to do the exam, not me. Therefore, you need to try and put your effort and you need to attempt. One minute. Right. Thank you. The first part talks about the UK inheritance tax, and the second part is about the residency discussion. Even for the first part, it relates to the residency and domicile. If you look at the NO, he came to UK in 2010 and he passed away on 30 November 2000. 22, sorry, 2003 up to 2022. And he passed away in the UK. So looking at that date, you can see he has been residing for more than 15 years in the UK anyway. Therefore, straight away you can tell that no was UK deemed domicile. Although he was not domicile in the UK, because the question is clearly telling that had a domicile of origin in the country SCART. Therefore, he was a SCART domicile, and he did not acquire domicile of choice in the UK. Even then, under the long-term residency, he was treated as deemed domicile for the purpose of UK tax and for the purpose of UK inheritance. Yeah. So let's look at the answer briefly. His house in SCART and UK inheritance. He was a resident from 10 April 2023, which is the tax year 34. He died on 30 November 2022-23. Yeah. So he has been residing in the UK for 19 years at least, up to the prior year. Normally, you always count up to the previous year than the year in question that you're dealing with. Therefore, you always talk about the previous whatever number of years. In this case, 19 years, which is clearly more than 15 years. The 15 out of 20. So he was not domicile. He was not claiming the domicile of choice in the UK, yet he has been resided for at least 15 out of the previous 20 years. Therefore, he will be treated as deemed domicile. So here, all you need to do is the second point and the last point. That will actually earn you good marks. Always think about the marks. You're actually putting the more relevant points. And if you have time, if you can manage, you can always jot down one extra point. That will carry at least half or 1 point, 1 mark sometimes. Sometimes our answer won't always be greatly relevant. In that case, that extra point will score you a little bit of the marks and help you make your 60%. Remember, in exam, you always aim for a minimum of 60% plus, not the 50. I know 50% is pass mark, but you always try for 60% being your pass mark. Then you are always in safer net. So you can say UK domicile or deemed domicile individual will be liable to UK inheritance tax on worldwide assets. Remember that table that we discussed. That table is telling you that if someone is domiciled or deemed, then he or she will be liable to UK inheritance tax on the assets, no matter wherever the assets are situated in. So it's a bit longer answer for 3 marks. So I think the second point and the third point and the fourth point and this fifth point is obviously the final answer. Therefore, his house in SCART will be liable to UK inheritance tax, being part of his death estate in the UK. So the last point, the second last point, the third last point, and one from the beginning, which is the second point. So the second, the whatever, fifth, sixth, and seventh, this point, and this will be enough. Especially the last 3 points are the more valuable points for the purpose of 3 marks. So keep that in mind. Even if you know a lot, it's no point writing a lot for the lower amount of the marks. So you always keep that in mind. So the second part, well, I carried on here. If he was not UK domiciled, only UK situs. UK situs means UK situated, and you can always use this technical word situs. UK situs assets would have been liable to UK inheritance tax. So what he's saying is, if he was not UK deemed domicile, then his SCART house won't be liable to UK inheritance tax. You don't have to go up to that. It's just for completeness and for the knowledge, I have expanded a bit further. This is part of the exam question. Second bit is Dan, non-UK resident in 2220. This is the question. Yeah. Here, what you need to do is you need to go back to the first Baracco question and borrow the knowledge from there. In this question as well, you don't need to consider automatic test because the question is saying he doesn't satisfy that. So you need to straight away go to sufficient ties test. But in this case, question is actually telling you he is not going to be UK resident. Now you need to explain why he is not going to be UK resident even under the sufficient ties test. That's what you need to explain. So there's a standard points that you need to be talking through. I leave this to you. We have already discussed under Buraku. So borrow the knowledge of Buraku question and apply here, especially those sufficient ties test. And 70–80% of the information and the content are going to be very similar and matching from Buraku. So try and understand those sufficient ties test and apply in this case. Remember, first put down those 5 tests. Out of the 5, remember the 3 always: family tie, accommodation tie, work tie. These 3 always useful to talk, and you normally get 3 marks for these 3 points, at least 2 without fail. And you talk briefly and take it to the scenario. It's no point just explaining what the family tie means. You may just talk about family tie and explain it, but it's no point. Just put the word family tie and try and relate that family tie point to the case, to the question, taking the information from the question, and you are likely to be right. And there, even if you're not going to be right, you will still get some credit. For example, something you're not sure, you put that as assume. Then you will be fine. Right. So I leave this for you. Right. I leave this part for your own practice. I'm going to be completing in around 5–7 minutes time. So I have one more thing to talk about. I was aiming to finish by 9. I'll try and finish by 9:05 or 10, the max. Another thing I have to discuss, but before that, if you have any question, please let me know. Either unmute and speak, or please put in the chat box if you have any question. Last chance to ask, please. Friday morning, please come up. Don't be too quiet. Okay, then I have things. I'm going to talk about this ethical consideration question. In exam, this carries 5 marks very quickly, the first part of the question. And this is relatively easy marks. I wanted you always grab this low-hanging fruits, the easy marks first. And this is not typically tax technical, it is ethical point. It will be part of the section A, question number 1, 50-mark question. And it will have 5 marks worth, which is a lot. I know a lot of the students in the past in the UK, they have just failed by 2 or 3 marks in exam. So that 2 or 3 marks you can easily gain from this ethical consideration question. This is relatively, let me have. Okay, I'm coming onto that briefly. Sumit is asking how to enhance the professional marks. Let me quickly finish this ethical consideration and I'll spend a few minutes on that professional skills. Ethical consideration, normally 5 marks in the first question. This is relatively easy marks, few lines, and you can easily get 3 out of 5. And you may easily miss this. Be aware, you always want to gain this 5 marks. You may not always get 5, but you can easily get 3. And you can get 3 from your knowledge with some application to the case, to the question. Sometimes we miss this point, whether there is issue of any suspicious activity. If client is trying to hide something, if client is trying to not disclose some of the information, income or gain. And if so, if the client is trying to do it deliberately, then there is an issue of risk. These are the things you need to be aware in the question. And does it take it to tax evasion? If tax evasion, let's see what may be. In any case, there is the issue of penalty and interest. Under the ethical consideration, you always try these bits. Is there such suspicious activity? Is there any non-disclosure? If the issue is deliberate, what is the risk? Is the client trying to evade the tax? In any case, there is a penalty and interest. Yeah, these are the standard thing you try in any question, but related to the exam case. And there are 5 these weird and wonderful words you need to bring in the exam. Integrity, that simply means honesty. Objectivity means not conflict of interest, brave enough. Professional competence, do you have capacity to do the case, do the task, do the assignment? Confidentiality, privacy and confidentiality. Are you breaching the GDPR rule? Are you sharing the client information to others or not? Should you do that? You absolutely shouldn't do it. And professional behavior. Are you dealing in a professional manner? These 5 weird and wonderful words, try and remember from the code of conduct. And you will try and relate 2 or 3 points from these 5 words to the case study. Then it will take you to at least 3. Yeah. So here I have a question about professional skills. I'm going to very quickly chat through. Let me take you here. Yeah, this professional marks is a new thing in advanced tax exam from June 2023. It used to be a very small number, and suddenly this increased to 20 marks. So this is telling that when you are answering the question, you are not answering technically, but also answering in a professional manner. So in a way, it's actually good. It used to be 100 marks. Now, basically, it is 80 marks question, but you're going to get 100. What I meant by that is, if you attempt that 80 marks question in professional manner, you're attempting 100 marks question. And even in the 80 marks technical, the 5 is ethical anyway. That's something we touched earlier. 5 ethical marks, 20 professional marks. Out of the 20 professional marks, 10 marks is going to be in the question number 1. So if you look at the question number 1, which is 50 marks, only 35 marks is coming from tax technical, 5 marks from the ethical, and 10 marks from the professional skills. And out of the professional skills, 10 marks, about 4 to 5, I've said there 5 to 6, I slightly exaggerated, 4 to 5 marks comes from the communication alone. So now, in some question, especially in the part A question, you are going to be presenting your answer in a more formal, in a more structured manner. I'll explain a little bit further on this. This is going to be like a real life circumstances, real life scenario. For example, in my firm, every time I email a client, I always put some standard of the email. I don't say PFA, please find attached. I spell it out. I always begin with hi or hello or dear and say, thank you for your email below so and so. And then I say, as discussed, please find enclosed my workings for you or something, and explain it further and say, if there is anything that you want to discuss further, please do not hesitate to contact me. Thank you. Regards, Sam, for example. This is a simple email format. So it is telling, this question is telling, the question 1 is telling that now you are not only putting the technical points down, you are also presenting in a professional manner in terms of communication is 1 point. And communication has a big weight, big value in question number 1, about 4 to 5 marks as a bare minimum. The second is professional skepticism. Professional skepticism simply means that you don't just take the face value of the client information. That simply means what I call is nosy in a positive sense. Means always question the information provided. Is it correct? Is there something missing? Do I need to ask again? Do I need to clarify something with the client for the question provided, for the information provided, for the data provided, for the spreadsheet provided, for the PDF provided, whatever information is provided? Basically, you are just not taking the information on its face value. You are questioning, you are querying. That is the professional skepticism means. Use your judgment. Is he complete? Does he look fine? Is the Mars payslip and the P60 equivalent in terms of the figures? Is there anything that I need to cross-check? And so on. Another one is analysis and evaluation. We always know that when we read the question, first thing we need to try and understand what is the question asking. Do I need to look into it further? Do I need to review the information in a greater detail? And these are obviously related. And when you are analyzing and evaluating, you use the professional skepticism and professional judgment, obviously. And the final point is commercial acumen. Commercial acumen means whatever advice you are going to provide, is it going to be viable advice? Is it going to be possible? Can it be done in terms of the business? For example, what happens is you may be giving some advice, but it is impossible or near impossible to implement. Then it's no point. So that's the commercial acumen. So in the question, you may be advising something. I'll just give you one example very quickly. A couple of years back, I advised a gentleman who was at the age of 50 at that time. He did have his UK rental property rented out, and he did have a company where he was the 100% shareholder. And he was additional rate taxpayer, paying tax at the rate of 45% or above. And I found his wife didn't have any income. So I drafted my advice saying that you can share the property, you can transfer half of the property to your wife, and she can have half of the rental income, which is going to be at the lower income tax rate than what you are actually paying tax now. And I did the same about the dividend. I said you can transfer, you can gift half of your shares in the company to your wife, and half of the dividend is going to be taxable on her. Therefore, that's going to be taxable at the lower income tax rate, and so on and so forth. But suddenly, before I sent my advice to him, I wasn't too sure about one thing. How come someone in the UK is not working? His wife. And I checked further details with my colleague as well as the file. And you know what? I found he's 50 and she's only 30. I got even confused. How come someone is at the age of 30 not working and not earning? And I felt, okay, her wife is rich, so she can actually not work. But normally that's not a common practice in UK. Then I safely asked him why your wife hasn't been working, this and that. And I also asked further, because there is something that I needed to ask, which is not a tax question, which is what I call is the practical question. I said to him, how is your family life? How is your family relationship and all that? Because I wasn't too sure, him being 50 years and her being 30 years. And you know what? The client actually understood my question, and he just laughed at it and said, Sam, don't worry, she's my third darling wife, and I have excellent relation with her, no worries. So you can tell here, what I meant is, if I ask him, if I advise him to transfer half of his property to her, half of his shares to her, and so on, and if it turns out to be that he's going for another fourth wife, then what happens? He said that she's my third wife and she's going to be my last wife. That's what he said. So here, my advice now got changed. First, I said to him, well, in my advice, that you can share half of this, half of that, and split the income accordingly. Therefore, your total income tax within the family is going to be lower. But now, I safely say the same thing, but put a lot of caveat. And I mentioned the above advice would only be applicable depending on the longevity of your family relationship and so on and so forth. As you can see, it's not a tax point, but it's the practical point. It's the business acumen. It's the commercial acumen. Is it going to be applicable in the personal circumstances. Sometimes you can advise something which may not work in real life. Yeah. Therefore, I'm just going to be spending a little longer in the communication. Just bear with me for 2-3 minutes. So within the professional skills, I would want to talk a couple of minutes for the communication. It's going to be section 1, total marks 10, more weight on the communication, 4-5 marks. What you need to be thinking in exam is who you are communicating to. Your client, then you need to be a bit more formal and structured. To your colleague, then you can use the jargon. You can be short and you can use some informal sense as well. If you're writing to be HMRC, then you may be even more formal. You may need to quote some tax legislation reference and all that, at least be more structured. And third party accordingly. So depending on who you are writing to, who you are communicating to, your style of communication is going to be different. Number 1. Number 2, what for? What points, what issues, what you are going to be talking about? What is the question about basically here? And depending on that, if you're talking about income tax, you may be talking in one sense. If you're talking about capital gains tax, you may be talking differently. If you're talking about inheritance tax, your whole discussion sense, whole communication model is going to be different because it requires different headings, different points, and different context. So you may be writing a report. So it may be in the report format. You're writing a letter. In a number of cases, a letter or the email. Sometimes note of the telephone communication. Sometimes a meeting note. Sometimes file note for your own in-house file purpose. In some cases, a specific reply to the client's question. So you may be having some research and preparing a research note for in-house team or even for the presentation. Sometimes draft comment for discussion. Sometimes review notes, points for the training, etc. So it depends on the question, what the question is actually asking. Generally, letter or the email. So if you're writing to the client, then you need to be writing a bit longer sentence. When I say longer, not too long, but more complete sentence. And you need to be not using a lot of jargon and see what it is actually asking you. Explain, state, or illustrate. State means you're simply jotting down the point in short. Explain means you're explaining little longer, not too long in exam, little longer. Illustrate means maybe you need to give some examples, or there is a case, there's a question which you need to prepare the work on. For example, in Excel, do a little schedule and then relate that to your explanation. Generally, that's what it happens depending on the question. So jargon, abbreviation, technical and non-technical point. If you are preparing a file note for your meeting in-house for your manager, then jargon may be fine. Abbreviation may be fine. You may be a bit more technical. For example, PPR, your manager will understand. But if you say PPR to your client, they won't understand. So you need to explain it. Principal private residence. Principal private residence, you need to even explain further. Maybe main residence, a home that you have been residing, you have been living is your regular home, for example. So depending on the audience, depending on the person that you are talking to, you are communicating to, you are writing to, mostly letter and the email in exam, but there may be file note, etc. as well. So you carefully use the jargon abbreviation. If you say HMRC, sometimes client may not understand. For example, if I say HMRC to my dad, he won't understand. So I need to say HM, revenue and custom, and in bracket HMRC. Then in the next line or the next point, I can say HMRC, if you know what I meant. So depending on you, who you are writing to, for example, DLA, not everybody would understand DLA, but your colleague will understand, director's loan account. So if you're talking to client, then you may be writing to director's loan account, in bracket DLA. Then in future, you can carry on using that. I think that's all from me. It's 9:15. Thank you so much for listening. My very best wishes for your exam that's coming on 5th of March 2024. I think it's only coming up like in 11 days time. So very best wishes. Again, I wouldn't want to say go and do the mock, the practice exam and all that, but you will go and do that anyway if you haven't done. You have this 11 days, make the best use of it. My very best wishes for all of you. Thank you so much for listening. Thank you.
Thank you.
Very good luck.
Thank you, sir. I hope I trust the webinar provided the valuable insights for everyone. So I extend my gratitude to all participants for your involvement. A special thanks to you, sir, for delivering a wonderful and informative session. So wish you all the best for your upcoming exam. Have a great day. So I'm signing off from here. Thank you so much. Thank you, sir.
Thank you so much. Thank you so much. And very good luck to all of you. Once again, I would love to hear from you, your results in a few weeks' time. And I'm sure I'll see you at some point in future as well. Thank you.